So what I will do is that I will start by taking questions from you guys, and after the questions, then I will break down the strategy from there. So if you have any question from what you've been practicing, you can unmute yourself and shoot your question. Like I said, guys, if you have a question, please unmute yourself and start shooting your question. Those ones who have any questions with regard to what they've been practicing.
Good evening, Brian.
Yeah, what's up, Megan?
How are you, sir?
I'm good, I'm good.
Yes, I'm good. Man, I've been practicing, so I'm still waiting for my one-on-one. But
Okay.
as much as I've been practicing, I just want to know in terms of divergence, when do you spot it? When do you spot the divergence? Is it after the footprint or after the breaking of the first layer or the footprint? Which one is it? Can you just
So
let me know?
the steps that I normally send in a group, it says first thing you have to draw a footprint line. Second thing you
Yes.
have to draw a first layer line, and after that you have to wait for the market to break the first layer line. Immediately
Yes.
after the market breaks the first layer line, that's when you can go into the lower time frame in order to look for divergence. As
Okay.
divergence, it is in as each and every time frame have its own divergence. The reason why I'm saying go into a lower time frame is so that you can be able to enter way much earlier, because of
Okay.
something that when you use your time frame, just like have in mind that the bigger the time frame you go to, the bigger the divergence or the longer the divergence it will
Yeah,
take.
the longer it's gonna be. Okay.
So divergence, it is strictly after the breaking of the first layer, because of when the market breaks the first layer, it definitely shows that it is about to go into the opposite direction. Now our full confirmation comes in with what? With the divergence, to be able to enter immediately where the turning is about to happen officially.
All right. All right. All right. All right. If I got another question, I'll ask later on. Just
All
wanna
right.
observe this
Okay.
one. Thanks a lot, King.
All
Thanks a
right.
lot.
Right. Let's see another one. Is there anyone who wants to ask me a question? If you've been practicing or whatever. If there isn't, I'll have to break down the strategy. All right. So those of you who are new, what we're dealing with here is the MMC footprint strategy. This strategy is applicable everywhere on all the time frames, basically everywhere. Now, how we go about implementing things here is that we look at how the market moves, and there is a pattern that normally forms in the market, and that pattern goes like this. For, for a buy setup, we have a line here that we call the footprint line. After that, we have a line here that we call the first layer line, which is the most important line because it is the one that will distinguish whether the market, it is sort of a boundary that we use in order to measure the market. So we know that when the market breaks that line, we're about to turn into the opposite direction. So basically from there, just a matter of waiting. And wait for a pullback. The pullback must not be higher than the previous point. Why? Because of when the market goes down, we want to be able to draw what? Footprint. Now, if we're having a situation where the first point even get exceeded like that, won't be able to draw a footprint line because of that's what we can draw from there, and that's not a footprint. Okay, so we want a situation like this where between this point and that point we'll be spotting a divergence. So let's do that practically here. Draft up an example. Do the same thing. I want to see the divergence there. So immediately after the breakout, I spot divergence. Those of you who don't know divergence, each and every time frame have its own divergence. I measure where was the market at particular time, and I also check where was the stochastic at that particular time. So I check the last point of the market is there, and I see when I also correlate it to the stochastic, I check it is there. Second point was there. Second point of the stochastic was there. So those of you who don't know, those of you who are new, we use a stochastic indicator to make entries, both entries and re-entries. Meaning even when we pile up trades on the market, we use the same technique, but then it will be like on different time frame and on a much smaller time frame. But in order for any form of entry or for any form of placing trades, we use the divergence technique so that we enter exactly where the market is turning. So when we spot this divergence and we use the stochastic, there are overbought lines and oversold lines on the stochastic. And those lines, which is this, which is this line, which is the overbought, and this one, which is the oversold. We want a divergence where the market tries to overbought and oversold, all right? And I'm going to draw a line to show that from this point to that point, you see an ascending chart. From this point to that point, you see a descending chart. So that definitely shows that we got what we wanted there. And the final thing that we confirm with, it is a crossing over. The crossing over, it is, you guys see these two lines inside the stochastic. You guys see those two lines inside the stochastic. So immediately after the cross, that's when an entry is taken. Okay. And normally when we enter here, we put our stop loss where on top, but we add some little pips to accommodate the spread. Okay. Let me use short position. If you enter a sell there, you're going to put your stop loss around it, not exactly at that point there. Why? It's because of we know that we don't expect the market to come back here and exceed, because at the end of the day we want to have a divergence, right? So we know that if the market exceeds the divergence, when the market is turning, we have to spot a divergence to the opposite direction if it is actually turning. So that's where we are willing to cut our loss, because we know that we'll be having a failed trade. That's why when you make an entry there, extend your stop loss there. And since from this trade was very clear, it's the same as Nasdaq that happened. Even now it is still piling down, but you guys can see it was very clear, straightforward. So hope you guys made money here. And even the trade before that, it was very clear, but there was consolidation before the market could react. You guys can see from there, you should have made your re-entries. From here to there, to there. And a long position would have been taken there. And yeah, you would have eaten the buy. Now you would have been in a sell, which is doing very, very good. I want to check. What is this thing? Nasdaq. Because even it is the same thing, so it was quite straightforward. Depending on, some can use this one as a footprint, some can use this one as a first layer, and just simply wait for the market to make a retest so that they enter here and take it down like that. And from there we use this one as a footprint, then we use that one as a first layer. If the market decides to come and break this, they know it's time to go into the opposite. So, but what I'm happy about with this strategy is that each and every movement, you will understand it before it actually happens. Because everything is just straightforward here. The strategy, you can be able to tackle it in all kinds of respect, and everything that it is bound to happen or that is about to happen, you'll definitely know it beforehand, because of the market will tell you something. You have some little footprints or little hints that you can rely on in terms of what will transpire in the market. Okay, so I want us to so this trade was a failed trade. Why am I saying that? Because of it went to a situation where there was a very clear footprint there. Uh, After that, there was a very clear first layer. But looking at this thing, if I can put my horizontal line, here, I would have seen that I cannot draw a footprint line from there. So if the market here would have went down, I would have drawn it there. But now that it even went to that exact, it is a failed trade. We just have to let it form a structure on the opposite direction so that we can see what we can have from there. But it's not something that is troubling. We just have to move to another one and see what it has for us. I want to check out gold and silver. So these trades have been consolidating for some time, but operated just looking at them on 1 hour with the 1 hour perspective. They were very quite clear, just a matter of waiting for them to respond, breaking the first layer, wait for them to break the first layer. Let's check out silver. It's the same thing. Gold moves the same way as silver. So just a matter of waiting for it to respond. But they've been consolidating for some time now. So consolidating one moving into the direction, of course. So what I also want us to do now is to take a trade that we can be able to see. So seems like everything here is happening in the same movement because of the charts. All seems like everything it is. Okay, this one is totally different. So it seems like there was a very same volatility today on most of the pairs. I don't know if there was a news event or what. Probably there was a news event. But at the end of the day, news events do not affect our trade, because news events, if you can be able to spot your footprints properly and everything, you'll be able to see what needs to be done. And sometimes you can get yourself in a situation where you should have not, where you should have let me do this. I want to show you an example where you didn't realize what kind of a thing you have. So some can do this and you will think, okay, now it is time to sell this pair. Fine. But if you don't see a footprint that is also on the opposite direction, that's the footprint. And imagine I'm extending a footprint line like that. As I'm extending the footprint line like that, immediately I know that, okay, If this thing was going down, it was just going to go down after here. It was not come to break even my footprint line. It was just going to go down from there. Now, the fact that it even broke the footprint line of the of the opposite direction and even made a divergence, a very steep divergence. It definitely means something. So that's why you saw. So even if there were news events, if you would have spotted footprints when the news comes to kicks in here, you would have benefited from there because news they normally take just minor minutes, if not sometimes seconds. But you can be able to see the picture of where the news event is going. So let's check something that is useful for now. Uh, Because if I can be able to draw it as a footprint line, draw it as a first layer line, it just broke. And there are some people who normally enter here, which is not advisable. The reason why the first guy who asked about when we actually spot the divergence, it's the time to fully focus. This will also add on top of the answer that I gave you. First thing, draw the footprint line. Second thing, draw the first layer line. After that, you must wait for the market to create a pullback so that you can spot some form of divergence in order to take it up, to continue taking it up. Because as it is like this, you can enter here and it will find out it's just a false breakout and it goes back. So you must have, the reason why we enter here is that immediately when the market don't just turn like this and after that and turn like that. No, we know the market moves this way. So the main aim is to turn on the second point to take it to the opposite direction. To enter here, even if I had a strategy that allows me to enter here, I wouldn't want to enter where the market actually turns directly. The reason why is that it'll be a hassle for me to kind of know where I can size up my stop or know when to actually pull out of a trade. Because of that way, when I have a clue of where the market ends or the ending point of the market, I can be able to operate effectively in terms of putting out the stop loss so that I can rank, okay, if the market comes here, I cannot really do anything with it. But if I were to enter immediately when it turns, it will be hard for me to size up my lot size or to know when I should actually pull out. Because I wouldn't know if the trade is going against me or it's just making a retracement. Because immediately after it has passed me, it will be a situation like this. After the market passes there, you don't know whether it's continuing or it's just reacting. So if you put your stop loss here, you'll forever be knocked out. You'll forever be knocked out. But when I have a situation like this and I put my stop loss here, I know I have a distance between where the market ended or meaning where the entire trend ended. So I have something to measure with. So it is smarter way than to have just the ending point and not know when you should, how you should size up your thing. Because even though you are leveraging, you can make as much money as you can. You need to be very proactive in terms of knowing when the market does no longer make sense for you, or when you should pull out of a trade. Okay. Hope you guys understand. Um, let's move to the next one. I'm on 1 hour now. Try to look for something. This one is left off. Left us. So left us too much consolidation there. Check for something. No clear. The structures are almost the same, all of them. Same kind of movement. Let me see. I want, when you make an entry, you have to make it, in a way that you just saw your first layer being broken, and it is time for you to take up a divergence so that you can be able to enter a trade from there. This one, it hasn't retested. Okay. Oh, the trade. Okay. Find it quick. In order to grow the. All right, there we go. So from here, if we can be able to check this thing out. Some would have said, okay, for this trade, I can use that as a footprint, which is fine. And after that, they will say I can use that as a first layer, which is fine. And after the divergence here, I think they will take this thing down like that, which is fine. After that, they need to be able to see this as footprint. And as the market goes down, you can use that as a first layer. After they see that, okay, even the market came and break the first layer, now it's just the time for the market to make a retest so that we can continue taking this baby up. There's no business going down. So that's why I'm saying that you will definitely know, because if it is not going down like that, it is going to go up. So you definitely have to need to have that confirmation for you to continue taking it up. Um, so even this one is not at an entry phase, meaning you just have to wait. And pay attention, like I'm operating on 1 hour, no? Because if I can go to 5 minutes, it might be a different case, depending on the kind of a time frame you're in. Just like I said. So it really doesn't matter, but at the end of the day, you can operate in every time frame. Uh, I'm seeing the same pairs here. Let me do this. Let's do Forex. Still seeing the same things. Mm. Okay, let me use 4 hours of this. Let me see something. 4 hours of this, you find out it's a different story. Because looking at this, simply extending this line today, it's even a footprint line on its own. So it was broken. After it got broken, there was a very big divergence that happened here. If you can compare this point to that point, this point to that point, you will see that it had to go up from here. So now going into a minor detail, let's say 15 minutes, we'll be able to spot divergence. I mean, not divergence, a footprint that will unindicated by. There's no way it is not going to form. So check this out. There's the footprint. After that, there's the first layer. So it happened in a way that it makes sense. And if you can check the first divergence according to the thing, where the market touched the support, oversold, from here to there. There was too much consolidation, but at the end of the day, of course, it followed. And you would have put your stop loss at around there. So now you're already being profit, and you just use this one as a footprint only. The first layer has not formed, so you just have to ride, and I'll continue to add more trades until the first layer gets formed. So just a matter of waiting out here. So okay, let me do this. Let's check divergence here. Just have to wait for the confirmation. What's the thing? So that we can take it down. And Let's check. 4 hour might give us that there is a divergence here. Divergence, a bi-divergence. Let's check that out. Let's test it out. Okay, it gave us that. Definitely knew it. Let me check. Didn't give us a very clear one, but it gave us, let me see something. Really. Yeah, it gave us from here, even though the footprint, I mean, the first layer line was not broken there. So it's just a matter of waiting, I believe. Here. And another thing that we should be aware of is it is giving us also a cell. So just a matter of waiting for the thing.